All right, everybody, how are we? Sunny Friday afternoon, and yes, we're heading into the weekend, really. Thank you so much for joining me. I wanted to talk a little bit about Tesla Q1 kind of earnings results this week. I mean, first time in a long time that we're seeing some really positive commentary about Tesla specifically when it comes to their earnings. We'll talk a little bit more about that. But first and foremost, I've got to pay my bills. So bear with me while I play you a little message from our sponsor, Wealthify. They do have a cash back offer which ends in literally 8 days. So check this out quickly, then we can get into the content and have a look at what Wall Street's basically talking about when it comes to Tesla and the that brings us on to our sponsors, Wealthify. Wealthify is on a mission to make investing easy and affordable for everyone. They're challenging people to think differently and do more with their savings. Their promise is pretty simple: no complicated jargon, no daunting fees, just straightforward, effortless investing. Now, Wealthify are currently offering up to £200 cashback if you transfer an ISA or a pension to them, or up to £400 if you transfer both. Terms and conditions do apply. There is a link in the comments below. But essentially, you've got to register your interest for this by May 1st, 2022. You're going to have 6 months to complete your transfer. Not only that, but if you invest with Wealthify before June 1st, 2022, you'll be entered into a prize draw to win £20,000, which is essentially your ISA allowance for the new tax year, which starts tomorrow. Now, entries for this close June 1st, 2022. There is another link pinned below which will give you information on how you can enter. Terms and conditions apply both for the cashback and the prize draw. Unfortunately, if you're a resident in Northern Ireland, the prize draw excludes you. When you invest, your capital is at risk, so please remember this: you could get back less than you put in. Wealthify is authorized and regulated by the Financial Conduct Authority. If you do enter, please let me know. I've got my fingers crossed for you. I hope that you win. Thank you for sticking around for that. Really do. Thank you very much. Oh, there we go. All right. Okay. So let's get into the Tesla content. So I've been looking at some of the commentary coming out of Wall Street on the earnings call. I'm going to play a couple of clips. I'm going to also sort of provide a little bit of commentary on them as well. For the first time in a very, very long time, typically when you have like earning calls for Tesla, there seems to always be this kind of, I guess, this negative air. They're asking questions, they're probing. There's always this sense of skepticism a little bit when it comes to Tesla and their earnings reports. A lot of the time they will reference things like credits, for example, as making up a large portion of the sales. This is the first time that I think that I've ever come across an earnings call where Wall Street have generally been quite bullish about the stock. So I'm going to share my screen with you in a moment, and we're going to just review. Let's have a look at this clip right here from Wall Street.
Investor, you're saying, yep, this is exactly what we expect from this company. Here are the numbers within the numbers. They beat on the top and the bottom line. And by the way, they beat by a wide margin. This was not just beating by a penny or two. On the bottom line, they beat by almost $1. I think they beat by 98 cents. Automotive gross margin. Look at this. They increased their margins up to 30%. The estimate was for 28.9%. By the way, in the fourth quarter, it was 29.2%. And with regard to production in China, they did talk about that they have restarted it there. It's limited at this point, but they do expect it to accelerate as they come out of those COVID restrictions that are in place in China. Here's Elon Musk talking about his expectations for production this year.
I'm just going to pause it there because I think one of the key things that I wanted to pull out in this section right here, and I've spoken about this before, is the fact that over the years, Elon has tried extremely hard to make sure that the company, the production of the vehicles are virtually integrated. So therefore, all of the production of the vehicle is as in-house as it could possibly be. What that basically means is that you haven't got to outsource components to other companies where there might be a shortage of supplies, for example, and you don't have to take on that additional cost for them actually manufacturing it and delivering these components for you. And this is testament to that, because what we're seeing in the auto gross margins here is a significant increase. And when we start looking at the actually, let me just share this screen right here, because this is the top line detail that was released by Tesla earlier this week, and this is the financial summary. And when you start looking at things like, let's have a look at it year on year. So revenues, I mean, we're seeing an 87% increase on revenues year on year. That's 9 billion to 16 billion. I mean, that's absolutely huge. You start having a look at the gross profits now, 2.3 billion to 5.5 billion. That's 132% increase. When you start looking at the gross margin as well, I mean, in Q1 2021, it was 26.5%. They're now pushing 32.9, almost 33% gross margin. That'll be testament down to the fact that everything's virtually integrated. And I've spoken about this a number of times. I see this as one of the big advantages that Tesla has over their competition in regards to their how the business is basically going to be going for the future. If you're buying into Tesla and you have bought into Tesla, one of the main reasons why you're buying it is because you believe in the vision of the business moving forward and their ability to make money, their ability to be profitable. So this for me is a huge benefit in there, and that hasn't gone unnoticed in Wall Street either. Let's get back onto this clip right here and see what else they had to say, because there was some really interesting commentary that came through as well.
Production in Q2 will be similar to Q1, maybe slightly lower, but it's also possible we may pull a rabbit out of the hat and be slightly higher, but it's to be roughly on par. But then Q3 and Q4 will be substantially higher. So it seems likely that we'll be able to produce over 1.5 million cars this year.
Right. This is a really big point that he mentioned here as well. So if you look at the delivery numbers for Tesla, actually breaking down the numbers specifically, I'll need to find this actually, because we were looking at the delivery numbers. The delivery numbers are very different to the actual number of sales that they actually managed to get. They actually hit on one of the metrics, missed on the others. But what Elon was basically alluding to in this clip right here was the fact that they've had a little bit of issues when it comes to production of vehicles, purely because Shanghai has been shut down for a period of time, because China's still struggling with coronavirus. So they still had lockdowns in that part of the world. And what he's saying there is that he thinks that they're going to be able to ramp up production, not in Q2, but Q3, Q4, quite significantly. And that will form partly because of the fact that Shanghai will be back to full production. But let's not forget, we've also got the Gigafactory in Germany, and we've also got the one in Texas as well, which will also be pumping out vehicles in terms of their production numbers. So if they're able to get to 1.5 million vehicles produced and potentially actually delivered for 2022, I think that could be quite a good move for the business, and it's going to be positive for the share price moving forward. We know that with the share split, the stock split that has been proposed, which should be approved later on this year, I think it's going to be in September or so, we should see further movement through the share price as that leads into it as well. So it's going to be
And
very,
as
very
you look at
interesting.
shares of Tesla, we should also note that Elon Musk on the call said that the company has an outside shot at increasing deliveries by 60%. So if you take a look at the
It's a
numbers
big
from
number.
last year, it was 936,000 vehicles delivered. Increase that by 60%, come out at like 1.497 million approximately. The estimate that's out there on the street right now is about 1.49. So it's not far off from what the analysts are expecting. And one last note, guys, if you thought that Elon Musk would go a whole conference call, including a half hour with analysts asking questions and not mention Twitter, you are correct. Word didn't come up once, not once during the conference call last night.
I think that's a good thing more than anything
That
else.
was a surprise to me, Phil, that not one single analyst out there would even ask him about that and whether or not he would use his personal stake in Tesla to borrow against for the Twitter deal, only because that would actually impact shareholders. But when you were on the call last night, Phil, you had mentioned this phrase that was really interesting to me, and that was that he was never as optimistic as he was about Tesla as at that moment in time. And it struck me as really, if he's going to say that when he has got a free pass to throw every single potential headwind out there as a potential reason why they may not hit even 50%, that was really bullish.
I think with that, I think Elon is enigmatic in his own sense, right? He's quite quirky, and you never know what's going to come out of that guy's mouth. And sometimes he will, indeed, kind of say things to the detriment of the business. That's not something that he hasn't done before, and whether he does it intentionally, I don't know. But I think for such an important quarter with such important numbers, I think it would have been foolish of him to say anything that would have potentially put a downer on the numbers and what the team at Tesla have been able to achieve, because it is quite an achievement. And they get on to talking about the competition in a moment. And that's one of the big points that I do want to make. I've spoken about as I see them, unique selling points or some of the strategic advantages that Tesla has over the competition. And this is now, I guess, from a Wall Street point of view, really, really standing out. And you'll see that in some of the commentary that's going to come along in a moment.
Extremely bullish. Now, look, if you went into this call hoping to get a little more details regarding the extension of production in Germany as well as Austin, you got a little bit of that. But you also got vintage Elon. He loves to sit there and say, Robo-taxis coming, going to show you it next year, and then we're going to go into mass production in 24. We are going to invest more money in the Optimus humanoid robot. We think that that's going to be a bigger business than the auto business. Sort of typical what we've come to expect from him over the last several months. That's what we got a lot of on the call.
Smith
there we go. So there's a lot of stuff there around the actual future of the business. He did mention Robo-taxi. Now, people have been talking about that as being a really exciting point. And essentially, this is something that he's saying or is speculating will go into full production in 2024 or so. And essentially what the Robo-taxi is, from what I've been able to find out, is it's basically it's a full-size Tesla that doesn't have a steering wheel or any pedals, fully automated, and that will act as kind of like a Robo-taxi. And he thinks that that will drive revenues through the business even more. So that's something else to add on to it. There will be an event specifically for that a bit later on this year, but there isn't much being said beside a small clip that I found on YouTube where he just kind of described what it was all about, essentially. So, I mean, Tesla, it's interesting watching the stock price because the stock price has been very, very volatile. And I guess, even if you look at likes of Kathy Woods, for example, she literally last week increased her price predictions for Tesla again. And I guess maybe you take that with a little bit of salt. She's come under fire a little bit because of obviously the performance of her ARK funds. In her ARK K, I believe Tesla is the biggest weighting in that portfolio specifically. But she still has quite a lot of faith in Tesla as a business moving forward. And therefore, she's actually increased her price targets. I believe she put it back up to like $4,000 or something like that a share. Now, what does that actually mean moving forward for Tesla stock? Now, I own Tesla stock. I've always been quite bullish on the business purely because I've had the car for such a long time, and I do love the brand. And I'll play a clip in the moment where Jim Cramer, and he can be very, very hard on like Tesla, right? He can be really, really hard on stock sometimes. He, when looking at commentary from the analysts, was saying that a lot of the analysts now are a little concerned about the competition when it comes to Tesla, and the fact that they are so far ahead. And we haven't even started talking about things like the full self-driving technology. They've had a little bit of a, I guess, difficulty on the full autonomous self-driving platform, and Elon's actively encouraging people who are buying Teslas to actually subscribe to the full FSD software package. So I think you pay, I think it's like $12,000 or something like that for it. Then you can pay a $199 per month subscription fee to enable that software on the vehicle. But essentially, what I think they are having trouble with at the moment is data to prove safety. So every time there's an accident, obviously safety becomes a really, really key thing, and they just need more data. And this is despite the fact that they've been collecting data for almost 10 years now, if not more than 10 years now, but legislation is still caught up. So they have a little bit of an issue when it comes to that. But generally, when you think about them and the competition, I'll try and find this clip whilst I'm speaking here, because it's really quite incredible to hear the guys on Wall Street actually highlight this as being one of their main concerns as well. And I think it's a really, really important thing to highlight right now, because Tesla is so far ahead of everybody else in the EV game right now. Let's just play this clip right here and just get some thoughts, so you can see how enthusiastically they're talking about them. So this clip right here is talking about, and this is something that we should definitely not skip over. There have been a lot of issues with chip shortages, supply chain. For some reason, with the production numbers and the delivery numbers, this hasn't hit Tesla as hard as it has other car manufacturers. And I mentioned this in one of my other videos, where what Elon has been able to do, because everything's virtually integrated, is they can rewrite some of the software to circumnavigate the need for certain chips that they couldn't actually provide. And this is a big, big thing, because whilst there has been chip shortages, you would expect that production numbers would dwindle as a result of that. But as we can see, the production numbers are actually right on the money. We're seeing that the company's really, really growing when other manufacturers are actually struggling right now. And that's really, really promising for the Tesla stock price moving forward. And people will ask, why is that possible? It's because, I mean, at the core of it, Tesla is actually is a tech company. They just happen to make cars, and so you have to give it to the ingeniousness of Elon to be able to create something where it almost feels as though he can look into the future and he can see problems coming down the line, and he has an answer for them up front. It's really quite incredible what he's actually able to do. But yeah, we'll see. Oh, you can't see what we're watching. Bear me 1 second. I'll go back on that section right there so that you can hear the commentary that was on there. I didn't click that on. Cheers for letting me know, Stuart.
Like, this was a big surprise. As Phil just said, they not only hit the ball out of the park, it seems like they hit the ball out of the parking lot. The supply chain issues, they're very adept at looking around corners. They've got incredibly bright people on their supply chain, but the chip shortage that slowed down most automotive manufacturers didn't slow them down. And that's largely because they can take what chips are available in the market and rewrite their software. And use whatever chips are available to them. The other automotives don't seem to have that capability.
Margins also, I mean, the sales number just nominally, and the growth was almost out of this world, almost like a SpaceX. But the
Yeah,
margins,
during my yeah,
yeah,
sorry, Joe.
margins
During my years
doubling
at Tesla,
the legacy, double the legacy producers, the margins.
you're absolutely right. Like during my years at Tesla, I can't.
I mean, you do have to take note of what he just said there. It was double the legacy manufacturers. I mean, I don't know about you, but next time you're driving down the road, try and count how many Model 3s and Model Ys that you're seeing on the road. I have seen a huge uptick in the number of Teslas on the road now. Even speaking to the guys at, the service centers in Birmingham, they are selling these things hand over fist. Like, the waiting list is absolutely huge. You go and have a look at the secondhand market for Teslas right now, extremely healthy. I mean, my car is almost going to have 150,000 miles on it. I was looking at used Teslas with similar mileage to my car right now, and they're selling for 28, 29,000, 30,000 pounds still. So as a product, it is sought after. And what Tesla has the ability to do, and they've started to do this in China and in the States and some other territories, because it's now vertically integrated and the demand for the product is so high, they can afford now to increase the prices marginally. You've got a recent $2,000 increase on the Model Ys, for example, because they have such a massive list of people wanting to get access to these cars. And I haven't even mentioned the supercharging network at this point in time. And it's absolutely huge. Let's carry on with what they're saying here.
Tell you how hard it is to double a business at this scale in hardware, and Tesla's been doing this for years, and now they're at this scale still growing at 87%. And as you said, their profit tripled to $1.1 billion, but their gross profit margin at 30% ex credits is double GM and Ford's.
Double GM and Ford's, and that doesn't even include credits. So, in previous years, the credits formed a large part of the profits and the numbers that Tesla were returning. Now we've come to the flip situation where the credits are such a nominal amount. I believe the credits, if I go onto this other site, if we look back at the investor report, the credits come to about 663 million, right? Their gross profit was 5.5 billion. So it's almost less, just over a tenth of their profits are down to credits. That is a big, big, significant step for the stock moving forward. And I think if you invested in Tesla, you will be taking a lot of confidence from that for the future of the business.
They're not only executing at the top line, they're executing at the bottom line as well, which is really impressive.
Are you going to see Shanghai become a headwind more than it was?
I think in the very short term, you're going to see Shanghai affect the second quarter. They hinted at that yesterday. They've already missed several weeks of production in the second quarter in Shanghai. That affects their margins because the cars are less costly to produce in Shanghai. So it will be a short-term issue, but I think for long-term investors, it's just a blip.
So to talk about Robo-taxi, you can make a lot more money on those. It's an important future product, but do you think he's being
I want to hear this.
optimistic about when it can happen, or this time we have a better idea of when you could actually deliver something like that?
I've seen this movie up close during my time at Lyft, and the Robo-taxi challenge is a very hard challenge. However, what a lot of people don't understand is a Robo-taxi is worth about $250,000 of profit. So if they're successful, that completely changes the car business from a one-time sale where you're making $8,000 to $10,000 of profit per car, and you're producing a car that can generate 31 times the profit. That's a goal. What a lot of people don't understand is
That's incredible. Like I said, I don't know enough about the Robo-taxi thing that they're talking about here. Elon's alluded to it, and I think people are saying that he's very, very optimistic to think that he's going to be able to ramp up production for that in 2024. But if you think about what he's just said here, if they do succeed in that, I mean, we talk about the Tesla share price and profitability of the business. This is the great thing about Elon. He is a visionary. He really, really is. And if you're going to bet on anybody to be able to pull this off, he would be the guy that you would put money on. But according to these numbers, being able to X your profit margin by that much, by 30 times, it's hard to even think about what that actually does for the profitability and the share price in the business. But at this point, we're still
Is Elon, when
speculating.
he makes these statements in public, is largely intending to motivate his internal team and point them at the next hill or the next horizon. But I think for long-term investors, that's not where I would place the value of this company. We're in the very early innings of electric vehicles. This company can grow to be 5 or 6 times its size over the next 10 years just in electric vehicles. X robo-taxis, X robots.
That's a pretty bold statement, to be honest. But I mean, look, he's worked at Tesla, so he probably has a better idea of the industry as a whole, being inside and having worked there to know this. But if you imagine, Tesla 5xing in the next 10 years or so, that's a phenomenal market opportunity. I mean, I know there are some questions here. Stuart is asking here. Actually, no. Cardano is basically saying here, there are a couple of things from you, actually. Let me just get to the top. So Cardano is asking, I will be worried about charging it and being stranded. Are there many places to charge? I live in London. Mate, in London, there are lots of places. You've got Westfields in Shepherd's Bush. You've got a couple of places in Canary Wharf that you can actually charge. And there are other locations as well through the city. So I drive down to the city quite often. And I will either charge either in Canary Wharf, Shepherd's Bush, Westfields. And they've got multiple charge stations and stuff. So even if you're in London, you'll be completely fine with the charging network. You don't have to worry about range. I mean, even if you were to get, one of the short ranges, one of the ones that isn't actually long range with a battery pack for the range, I think you'll be fine in terms of actual charging. I mean, these things can do 200 miles, 250 miles really without being too much of a hassle now. And even if you are doing a lot of miles, I do a lot of miles, I've never had any issues with charging it. There was a question on here around, do you know when the stock split is going to be happening? We don't know yet. It needs to be voted by the shareholders. That's going to happen later on in the year. I think it's going to be around about September. We don't know what ratio it's going to be split by. The last time they did it, I think it was 5-1, if I remember rightly, in August 2020. But we don't know what the ratio is going to be. It still needs to be approved by shareholders. But that will happen later on in the year. I think the consensus is that we will get the approval from shareholders to split the stock, which will be really, really good, because I anticipate in the run up to that actually happening, you will find that there will be a lot of trading volume and a lot of movement within the share price itself. Where was I? Let's get rid of that one. You know what? I mean, this is this is all going to be down to, number one, legislation. It's all going to be down to the tech behind it. I mean, I think it is safer if you have a robot actually driving, less human error. But you need to make sure that you then have the software that is really on point to make sure that, everything's really, really safe. I've been in Teslas where I actually, I've had autopilot on. It would do really, really, really strange things. There are bugs in it, which is why all the cars kind of feedback information so that they can improve the system. They can make it better. But I do agree, long term, I think it would be actually a lot safer if you had robots eliminate that problem of human errors you're saying there. Are you buying or selling? Are you selling shares or are you selling the car? Let me know, mate. But anyway, I just wanted to do this video because I thought it would be interesting, just as a kind of a response to everything that's happened this week with the numbers. I've been looking at them with real interest. I mean, if I look at the share price, we saw that it was up a little bit, but as always, it's always going to be volatile, and the share price is always volatile when it comes to Tesla. So, I mean, this short-term volatility, really, I'm not too concerned about. I'm holding for the long term. So as long as we start to see, the share price and the delivery numbers and all of that kind of stuff increase, the share price will go north with it as well. So I'm really, really excited about the share. Should you be buying Tesla if you haven't already bought Tesla? Well, that's down for you to decide. I'm not saying that you should or should not buy. I think ultimately you have to be willing and happy to handle and deal with the risk that comes with putting your money into a company like Tesla. Volatility is just the way that these things actually work. But as a long-term company, could it be really, really good? I personally believe so, but that's based on my own convictions and my own research, my own feelings about the business and the product itself. I think, yes, you need to come towards your own determination of that fact and how that fits into your journey specifically. This is a really interesting comment. Tesla often the most expensive car people have purchased and generally do not drive recklessly. Driving a Tesla is very, very different. So I was filming for Channel 4, as most people know, and someone reversed into my car. I've got a Maserati at the moment, and by Jesus, I filled that up today. It cost me 130 quid to fill up. I mean, I've not done that I've not put petrol in a car for me to drive and drove away, then started to see the petrol just disappear. I've not done that for 6-7 years. And obviously, petrol prices are really, really high right now. But I wonder how people actually do it. 130 quid to fill up a tank. And I'm not being funny. It's a Maserati. It's a 2 litre four cylinder. 130 quid. I've not paid for fuel for. It's crazy. So driving a Tesla is very, very different. The fact that and this is one thing that I've struggled getting used to in the Maserati is, you brake in a Tesla and the regen automatically brakes for you, slows the car down, so it gives you a smoother experience. It means that you're not using the brakes anywhere near as much, therefore your brakes last much, much longer. I mean, I picked up my car pretty much almost new, and I only changed the discs and the pads all around the car, well, on the front at least, at 120,000 miles. So my set of disc and pads from the car brand new, lasted 120,000 miles. And that's because of the technology in the vehicle. So driving one of those things is really, really different to just normal cars. Really, really different. There is this comment here. Tesla insurance is underappreciated. All Teslas come with accident avoidance technology, cameras all around, incidents, and can prove who is at fault, and dealing with other insurance companies. That's very, very true. The other thing that is impossible to do with a Tesla is you can't steal a Tesla, especially if the owner of the car has now got things like pin to drive activated. I mean, I've got that in my car. You can't nick the car. You're not going to be able to steal the car. And you're right, the technology in there, the cameras, it really does keep you safe. So technology is good, generally speaking. Technology is very, very good. And in terms of the tech that goes into vehicles, in my opinion, Tesla have got a massive, massive march. I think the risk will come if the likes of Mercedes start to get their game together. I think that will be a big, big risk, because Mercedes, if you look at things like the S-Class, have for years been the front runners of the kind of technology that goes into vehicles. And if they get their game together and really kind of put their head down, I mean, I know that they have the EQS. I've not looked at one of those. I'm not driven one of those. But they normally have the march on, dictating what kind of technology you will see in your cars in the next 5 to 10 years. They've always been pioneers in that way. But anyway, guys, look, what did you think of the Q1 numbers? I was actually shocked by them, because you would have thought at some point the supply chain issues, the chip shortages would have impacted delivery numbers and sales numbers. And whilst on the ground, I kind of knew that they were selling a lot of Model Ys and Model 3s, and I've seen more Model S's. The one that I've not seen a lot of, and they've started to become really, really rare, are the Model X for some reason. I don't actually know why, but I see very, very few Model X's around now. But Model 3s, Model Ys, they're all over the place right now. There's so many of them. It's unreal. But let me know what you thought of the numbers. Were you surprised? Were you disappointed? Where do you think where the business is going to go? Do you think, he's right? Could Tesla 5X in 10 years' time in terms of the size? And he's saying that's just the EV segment, not energy, not Robo-taxi, just the EV segment. Be interested to hear your thoughts. But Oh, someone saying it. I was surprised. It'll be interesting to hear your thoughts. Leave something down in the comments. As a final reminder to you guys, the prize draw with Wealthify that ends on the 1st of May. So how this basically works is if you have a pension or if you have an ISA and you transfer those over to Wealthify, you can win up to £200 if you do one of them, up to £400 if you do both. There is a link in the description down below. If you haven't already taken advantage of that and you want to, feel free to do so. They also have that bigger prize draw, 20 grand. The closing date for that is the 1st of June. Again, I don't know if anyone is going to enter. And if you do, please let me know because I'll have my fingers crossed for you. You might be the lucky winner. I would love it to be someone who actually watches the channel. But as always, thank you so much. Have an amazing weekend, guys, because I think we're going to have good weather. I appreciate every single one of you for joining me. I'll catch you later on.